Hello guys, welcome to my tutorial video. This is Booker's Masterclass, and in today's tutorial video I'm going to teach you about what bearish flag is all about and how to trade it and make money. With this strategy I'm going to show you, you will be making not less than 100 you will be making not less than $100 per trade. So listen very carefully so that you'll be able to understand the strategy I'm about to show you in this particular video. So first of all, this is my Twitter handle. I am also going to link this link of my handle in the description of this video so you can follow me, because every day I'll be posting tutorials on how I make my money in the crypto markets, and all this tutorial is a strategy that I'll be using to trade the crypto market. So please, if you use the link, you follow me up. Okay, so today, as our topic says, is a bear flag. What is a bear flag in trading? Bear flag is a chart pattern that signals a continuation of a downtrend. So bear flag is a flag pattern that once you see it, you know that a downtrend, the continuation of a downtrend is possible. For example, what this means is that if a coin is dumping, so there will be like a time that the coin will pump for, like, maybe you just have some rising wedge and pump. Then when the coin is pumping, it will create a channel, and that channel it will create, we call it flag. So that flag is what we call, when it create the flag at the resistance, then we call it a bearish flag. But when it create the flag at a support, then we call it a bullish flag. That's it, the difference between bearish flag and a bullish flag. So now, after a strong downtrend, the price consolidates within two parallel trend lines in opposite direction of a downtrend. Once the support trend line gets broken, the bear flag pattern is activated as the price action continues trading lower. So what it actually means is this. For example, this is a bear flag. Now this downline is this. After this tutorial, I'm going to show you the practical aspect of it and how I make money trading this particular strategy. So once this is the upper flag and this is the lower flag. This example, in this strategy you can also use lower flag, more especially once a lower flag is built up, in as much as if this upper flag is somehow not is not always mandatory to use this upper flag. What you should focus your mind on is the lower flag, which is this particular one, the lower flag. So once this lower flag, you will draw it like this, will be when this particular trend is building up. So when you draw it like this, when this particular trend is building up, then you place your entry below here, waiting for a breakdown to occur. When a breakdown occur from this level, then you enter the trade and you continue the downtrend. Why we say that this is a continuation of a downtrend, remember, from here to here the coin, it was already dumping, then reaching here it had a short pump. Then this bear flag now help us to confirm the continuation of this particular trend here, which was the downtrend. So this bear flag helps us to confirm the continuation of the downtrend. Okay, now, as I explained before, after a strong downtrend, the price action consolidates within two parallel lines in opposite direction of the downtrend. Once the support trend line got broken, the bear flag is activated. So this is about bear flag. So let's talk about the second one. So in this video I'm only going to talk about bear flag. So in my next video I'll talk about bullish flag, but this particular one is bear flag, and I use bear flag a lot to make money in the crypto market. So a practical example I've shown you. This is a practical example of how bear flag looks like, and once you see it like this, once it got broken here, you enter your trade and you make money from the market. Now this is example, perfect example in my chart, if you can see. So this is a perfect example in my chart. You can see that how this thing build up. Okay, you can see how this thing build up from here to here. Okay, now this is how the bear flag is all about. For example, there was a downtrend here. See what I'm explaining. So we said that it is a continuation of a downtrend. From here to here, there was a downtrend, right? There was a downtrend. Then within a short period of time, we now start seeing pump. Okay, and then the pump build up to this thing called a rising wedge and created up this channel. So once it create this channel, what I'm going to do as a trader is I'm going to enter this trade here. So I'm going to enter this trade right here. I'm going to put in my stop loss above this trend line, so that even if I get invalidated, then I will just be stopped out of the market without losing much. But definitely you just need to place your stop loss, so that you just need to place your stop loss above for you not to have. So we're going to use this thing, you're going to use this as your target. For example, you use this particular lower line as your target, then you set this from here to here, and you make this stop loss is 6%. 6% is a bit higher. And why is it higher? Because we are on 4-hour time frame. So you can make your stop loss a bit lower, but then trading this particular strategy, you have to make your stop loss higher. Why is you need to make your stop loss higher? Is because so that a consolidation in this strategy will not take you out. So you set this up like this, and now you wait for a breakdown of this particular downtrend, this particular trend here to happen. Now you will not enter this trade until there are two ways to enter this trade. Is either you set your entry here at 8.45, you set your entry here and leave it, or you wait for a breakdown of this down channel to occur, then you trade it. So once I put in like this, I can come here and place my entry. This is particular place, and place my entry to short this target while the price is still here. Or I can just leave it and wait for a price for the price to break this lower trend line for me to enter this trade. So let's see how this thing is gonna play out. So you can see we just got broken and we are going straight down. You can see that we are going straight down, and that's how you are going to make your profit. From there, you can see from here to here we make a lot of pips, and if I just leave it, you can see that we still go down more. You can see that these are all profit. You are in the trade making your own profit. We will wait for our so this is how it is. And around these levels you can be taking your profit, because yes, you can place your take profit from here. You can as well place your trade profit where the channel started. So if you place your take profit here, you will be definitely get out of the trade. And this is a lot of pips from here to here. So you can see how much you made. At least you made like 34% in this trade. You made like from here to here 39% in this trade without leverage. You can see that 39% in this trade without leverage. With 10x leverage, this is about getting to 300% in this with 10x leverage. So these are a good strategy for trading the crypto market. So just put in a rising wedge or a bearish flag and you place your entry, wait for the downtrend to get broken, and you trade it and make money out from the market. So thank you for watching my video, and if you like what you have just watched, please do well and subscribe and like this video. Thank you.